Hi, Edwin. Good evening.
Good evening, Michael. How are you?
Fine, thank you. How are you?
I'm well. How was your day?
My day has been good.
Mm-hmm.
But it has been a busy day,
Mm-hmm.
up and down.
Mm-hmm.
Yeah, but we appreciate.
Interesting.
Yeah, so good evening, everyone. Welcome to this evening session. With me is Edwin Wangai, a trainer in West Banks. And for me, I'm located at Tekela, training office. So today we are going to cover uh, one topic, a simple topic, an interesting one. That maybe most people it tends to affect most people, and if you are trading and you're not aware of it, sometimes it might give you headache. So today we are going to cover CPI. So how do you trade using CPI? Basically, these are the economic events that we consider while trading. Today we are going to see the CPI, how CPI is calculated, how we come up with those values in the market, and again, how basically you apply it. So we'll go to the next page and we'll start there. Again, I think later. Okay, now. Edwin, can you hear me? The connection is okay. What about now? Hello, Edwin. Unanisikia? Okay, all right. So we can go to the first page and then start from there. All right. So sorry for that, guys. That is a technical problem. So basically, when you're dealing with systems, sometimes that happens. So when we talk of consumer price index, basically it measures the monthly change of goods and services. That is the price of goods and services purchased by consumers of a given country. So it's the most widely, or even the widely used measure of inflation and inflation, closely followed by policymakers, financial market analysts, business investors, and we also have consumers. So CPI is calculated as weighted average of percentage price change for a basket of consumer products. So basically what we are trying to say is that we take the average price of goods and services that are commonly used by consumers. We try to measure the change, or basically it measures the change of those goods or even the prices. Have they gone high? Have they gone low and all that? So as investors in this market, traders in this market, and other people who are involved in the financial market and even in other industries, that is the production industry, they tend to monitor basically what is happening. And we'll go through the calculation in the next slide and then see how they are able to come up with those values and yeah, basically how they are determined. So we are going to use an example. I think an example will be better, at least to see the calculation. How does it work? So the first thing that happens, there is, you gather the prices for a common product or service in the past. That is how basically they measure. That is if you are doing a monthly CPI or even an yearly CPI, you have to take the ranges. Now let's say 2020, an example, the price of, let's say like unga, the product that we understand here, let's say it was around 100 shillings, that is mithra. Rice, let's say 130. Cooking oil was around 150. That is during the year 2020. And then let's say this year, the year 2023, probably that price of unga basically hiked from 100 to around 210. We had the price of rice rising from around 130 to around 230. These are rough estimate figures. And then we have cooking oil rising from 150 roughly around 300 shillings. So you have past data and the present data. So you want to see the CPI, you want to see the difference in those prices. So what we do, you add those prices in 1 year, like 2020. So we have 100 for unga, we have 130 for rice, and we have 150 for cooking oil, which add up to around 380. And then 2023, we have this addition to 10, 230, 300. Those are now the present prices, which add up to around 740. So what you do, you divide the present price, which is around the present total price, which is 740. You divide by the past total price, which is around 380. Once you divide them, you get around 1.95. Now, what you do, you multiply this 1.95, you multiply it by 100, and then you're able to get, let's say, 195. Now, to convert this figure into percentage, basically you subtract 100 from this data that we have, or even the previous answer that we have here, the one that we have multiplied with 100. So we have 195, we subtract 100, and we are able to get 95%. And basically, if you look at those prices, you can see the rise was almost that range, 95 to 100%. So that is how you are able to identify the change in prices. That is how producers are able to know if prices are going high, if prices are going low. So how do you use them? How do investors use them? I will see that in the next slide. Basically, that is how we do the calculation, or how that is how the calculations are done. So Edwin, you can take us to the next page. So how investors use the CPI, and remember we say CPI is Consumer Price Index. So business owners can use CPI to calculate calculations to determine prices for their goods, considering what consumers may pay, given health of the economy. So that is, you are able to know, to see these price changes, and you are able to put the correct price tags on your asset. So of course, if the average price, that is the CPI, is going high, that is why you see even the the produced assets, or even the produced goods, their prices always go high. That is due to what has been happening, or even the trend that is measured by the CPI. And again, in another industry, which is, let's say, financial consultants, they provide financial guidance to their clients or retirement plans, investments, and taxes. So they usually calculate the consumer price index, that is the CPI, on different products within the economy to help their clients determine the potential investments and other financial opportunities to pursue. So as you can see, CPI is very important in an economy to investors. And now, how does it affect us as traders? That is how it affects the decision of investors. Now, as traders, we monitor the CPI as it can lead to changes in monetary policy by the central bank that will either strengthen or weaken the currency against rivals in the market. And remember, as traders, we want to see which asset is strong, which asset is weak. So CPI is a good indication. So the issue effect is when the actual CPI data released is greater than forecast, a currency tends to be strong, and vice versa is true. So for a healthy economy, we expect an inflation should be at least 2 to 3%. That is why even at the moment, most economies are struggling maybe to bring the inflation down to a level of around 2%. So the issue effect is what is very important. You need to understand the previous data, the forecast data, and the actual data that will be released. So what we'll do from there, we'll go to the charts, see the economic calendar, maybe check the CPI that has been previously released in the market, and look at the issue effect and see if it directly correlates what happened in charts.
Hi, Michael. Are you able to hear me from your side? Michael, are you in a position to hear me from your side? Hello, everyone. Kindly confirm for me through the chat whether you're in a position to hear me. Excellent, Michael. So this week we had the data point, the CPI data point for Switzerland, for Swiss economy. So I was trying to look at the effect of that data at the point when that announcement was made. So I'm just trying to pull the exact. So I'm trying to pull the calendar. So if you look at the calendar, at the economic calendar, on Monday we had data point relating to CPI for Swiss economy. So the expectation was for the rate to decline by 0.1% to a rate of 0.2%. But the actual figure was actually 0.1%. So there was a slight decline on what was expected and how that data point turned out to be. So going to the charts to look at how Swiss franc crosses were behaving at the point when that data point was released, I realized that most of them had a marginal variation, or there was a slight change in price, adversely affecting a Swiss franc. So if you look at Euro Swiss franc, so the data point was released at 9:30 on Monday, 9:30 a.m. in the morning. So what you'll notice is that there was a slight change in price by around 18 pips for Euro Swiss franc. Then when you look at USD Swiss franc, again, you'd notice that within the first 15 minutes after the release, the pair increased by 18 pips for USD Swiss franc. Swiss franc JPY, there was equally a marginal drop in the first 20 minutes after the announcement. So here you could have been able to get around 27 pips. So Swiss franc slid 27 pips against yen. The biggest move was GBP Swiss franc. So here you could have obtained around 30 pips for that announcement. Then Aussie Swiss franc, we had around 15 pips rise on Aussie Swiss franc. Canadian dollar against Swiss franc, we had price rising by 16 pips. Then New Zealand Swiss franc rose by around 22 pips, but within the first 20 minutes after the announcement, price rose by 17 pips. So basically that is how that data point affected the performance of Swiss franc crosses. So the movement was not quite big because the variance in the change of that data was not quite significant. So inflation did not change with a huge variance. So in most cases, you're likely to have volatility when the variance is great between what the projection was against the actual outcome of that data. So yeah, so basically that is it. So I'll now jump into the charts. So we have Mohasma Capello. You're saying that you had opened an account last month and you made a mistake of your ID and the name. So you're asking how this can be resolved. This can be resolved. So what I'd ask you to do, kindly go to fxpesa.com and check out our contacts and get in touch with us. Then we should be able to guide you accordingly on how you can resolve this issue. Yeah, so basically that is the only question that has been raised on the chat box. So that being the case, I think that is where we'll stop for today. So I basically wish to thank you all for finding time to join our live today. I hope you've been able to learn something. So yeah, so I wish you all a very pleasant trading experience, and I look forward to interacting with you in the near future. So enjoy the rest of your evening.